This is Russia, the largest country in the world, and the primary belligerent in what may prove to be the most consequential conflict of this century from the get-go. I want to stress that I, like almost every armchair general on the internet, and woefully underqualified to speak about the details of the ongoing invasion of Ukraine, however. This is a conflict that more than any that came before it is being fought, just as hard with economics, as it is with tanks and fighter jets. And from that angle we can learn a lot about a country that by many metrics is absolutely terrifying, but by many others is something else entirely, as all of us have been doom-binging. The latest updates of the situation in New Ukraine, there is a sound bite that we have been fed over and over again, which is that despite Russia's vast size, immense resource wealth, and large population, its economy is comparatively kinda pathetic. Its national output has been compared in size to American states like Texas and Florida, which is probably a bit disingenuous if for no other reason than the economy of Texas is massive. But it also sends the wrong message, because the economy of Texas is by almost every other metric better than Russia's. It's strange to call the 11th largest economy in the world inadequate, but it's not the headline figures that tell the full story, as much as it's the squandered opportunities. Had a few things been done differently over the past 3 decades, there is no reason to expect that Russia couldn't be one of the wealthiest, most prosperous nations in the world today. This was a country that in less than 10 years grew its output by over 800%. It had a population that was ready to embrace the free market and work their butts off to build a better future for themselves. And it had a world that by and large wanted it to do well to avoid regressing back into the Cold War. So what happened? Just how large and powerful is Russia's economy today? What stopped the growth it was experiencing in the early 2000s? And finally, is it in a position where it can justify a conflict as costly as the one it just got itself into? As always, once we've done all of that, we can put Russia on the economics explained national leaderboard. Yeah, this is gonna be another country. The economy of Russia, as we know it today, started at the end of 1991 after the Soviet Union was officially dissolved, and the Russian Federation was born out of its ashes alongside Armenia, Azerbaijan, Belarus, Estonia, Georgia, Kazakhstan, Kyrgyzstan, Latvia, Lithuania, Moldova, Turkmenistan, Uzbekistan, and Ukraine, the second most powerful entity in the world at the time, disappearing effectively overnight, left a very serious power vacuum. After living through a failed pure attempt in 1989, Mikhail Gorbachev, the last leader of the USSR, wasn't overly keen and sticking around as a public figure any longer than he needed to that left Boris Yeltsin, a former high-ranking Soviet politician, as the singular ruler of the new Russian Federation. So there was no reason to expect that he couldn't just revert the country back to a Soviet system of government. Seeing this potential threat and wanting to smooth out the situation as much as possible, a plan was put in place based off a handbook published by the International Monetary Fund and other international financial institutions. Here's a question for you. Let's say you have a country that is a complete failure. The government is gone. The currency no longer exists. People don't know who owns what. Basically everything is starting from zero. What do you do? Well, luckily some very smart people thought of exactly what to do, which is why we had the Washington Consensus, because it was formulated by the kinds of institutions that have their offices in Washington, D.C. The Washington Consensus is basically the IKEA instruction book you use when you are trying to build a national economy from nothing but flat-pack components. And it has 10 basic instructions: fiscal policy discipline with avoidance of large fiscal debts relative to GDP, redirection of public spending from subsidies, especially indiscriminate subsidies, towards broad-based provision of pro-growth, pro-poor services like primary education, primary health care, and infrastructure investment tax reform, broadening the tax base, and adopting moderate marginal tax rates, interest rates that are market-determined and positive, but moderate in real terms, competitive exchange rates, trade liberalization, the liberalization of imports, with a particular emphasis on elimination of quantitative restrictions like quotas, licensing, and tariffs. liberalization of inward foreign direct investment, privatization of state enterprises, deregulation, and legal security for property rights basically put these things in place. And you should have an economy now. Some of these were easier to implement than others. Trade liberalization, for example, started off slow between its former Soviet peers, but eventually Russia started trading its raw materials with the rest of the world. It also implemented a new currency in 1992, which it made exchangeable for the old Soviet ruble that came before it. A funny little side note was that the 1 ruble coin, worth less than 1 American cent at the time, was practically identical in size and weight to the 5 Swiss franc coin, which led to many Russians taking bags of these coins to hundreds of Swiss vending machines and buying trucks full of snacks that they would take back to Russia. I guess it didn't take them too long to embrace capitalism. After all, that's not very important, but it is very funny. What was very important was the point about the privatization of state enterprises. You might think, given examples like China, that opening up to international trade and embracing the free market was something of a cheat code to guarantee economic growth, at least in the short term. Unfortunately, that didn't really play out in Russia, and in the decade following the fall of the Soviet Union, Russia's GDP actually more than halved. The biggest reason for this was the botched privatization of the nation's industries. In the Soviet Union, all industry was owned by the state, but the Washington Consensus calls for value-adding industries to be privatized. There are 2 reasons for this recommendation. The first is that it establishes a free market. You can't reform your economy on the foundation of capitalism if all of the biggest industries in the nation are controlled by the state. The second reason for this recommendation is because it can make the country a lot of money in a very short space of time. Governments all over the world sell public assets off to free up cash, and former communist nations, theoretically, have the most to sell off. Think of this as generating seed capital to launch a new business venture, only instead of it being a company, it's an entire country. Russia did have a lot of valuable industries, natural resource extraction being the big one. But let's be honest with ourselves, it's not like that doesn't happen in our own economies, right? That's just part of being a free market economy. Well, more on that later. Russia also managed to get through the global financial crisis of 2008 relatively unscathed. Its banks were so new and unsophisticated that they avoided most of the problems caused by advanced financial instruments. They were, however, hit temporarily by the rapid decline in oil prices at the time. Nevertheless, by 2013, strong growth had resumed, and the economy was more than 10 times larger than it was at the lows of the 1990 financial crisis. The new president was certainly controversial, but sometimes a struggling nation needs strong leadership to get it headed in the right direction. The problem was primarily who this prosperity went to serve, a point that became particularly apparent in 2014 with the invasion of Crimea. Following the shocking actions taken by the Russian government in the United States, the European Union, Australia, and Japan imposed sanctions on Russia. These sanctions did 3 things. They put a ban on the provision of technology for oil and gas extraction. They put limits on travel for international Russian citizens who were close to President Putin, aka the oligarchs, and it banned the provision of credits to Russian oil companies and state banks. That last one was the big one. If state banks and oil companies couldn't raise money, they couldn't lend money, which in theory should starve the Russian state of the resources needed to continue hostilities. In practice, it really didn't do too much for a couple of reasons. They weren't particularly harsh, and they were rolled back pretty quickly after the fact. Russia was also more or less ready for them. Decades of selling oil and gas internationally meant that Russia had huge foreign currency reserves. Almost all oil is traded in American dollars, which meant that the Russian government and Russian businesses were easily able to stockpile the world reserve currency to keep on hand for a rainy day. The nation did need to use some of these reserves, and the value of the ruble did drop in international markets. But in many ways, this was kind of a good thing for export businesses in Russia, because a devalued domestic currency made them more competitive in international markets. That wasn't to say that there were no consequences. The economy did shrink, and the country experienced higher levels of inflation as imported goods were banned, meaning supplies of everything from food to medicine was restricted to what could be produced locally. This period was not great for the average Russian. But the thing is, the decision makers didn't care. Russia is potentially the most unequal country in the world. And I know I've said that about a few places. But here's the thing: we use a measurement called the Gini coefficient to measure inequality. This can either be used to measure income inequality, as in my boss owns 3 times as much as I do, or wealth inequality, as in my boss has 3 houses and drives a car worth more than the apartment I share with 4 other broke students. In the case of Russia, we will be looking at wealth inequality. The Gini coefficient ranks economies on a scale of 0 to 1 or 0 to 100 depending on who you ask. 0 represents perfect equality. Everyone has exactly the same amount of wealth, and 100 means that all the wealth in a country is controlled by a single person, and everyone else has nothing. According to the World Bank, Russia has a wealth Gini of 37.5, which is not great, not terrible. It's certainly better than the United States' 41.4 and far from South Africa's top spot at 63. The problem is that these figures are only constructed using the data that the World Bank has access to. The financial elite of Russia, all the way up to the president himself, have been exposed time and time again for moving money all over the world in order to hide and protect their true wealth. Studies from institutions such as Credit Suisse have theorized that if this money was moved back and counted within Russia, then the country would comfortably be the most unequal in the world. What this meant was that the people with the money and power to influence policy decisions were not the one being hit by these sanctions. Russian banks that were dry on cash could just tap foreign currency reserves and redirect lending away from regular consumers, all while those regular citizens struggled to find food and build a future in a failing state in a regular democracy. This would have been the end of the powers that be, but of course Russia hasn't really ever been a real democracy. In a place like Australia or America, you hold on to power by keeping the voting population happy. Yes, there are political donations. And yes, there are news networks that can influence these outcomes. But it still all comes down to the votes. In a place like Russia, you hold on to power by appeasing the same group of people that squirmed and bribed their way into owning the major industries of the nation. This leads us to the Russia of about 3 weeks ago, the country that had made itself a lot of money by selling a lot of oil and gas to a lot of countries that were beholden to their natural resource wealth, a country that was run by a very small group of people for the benefit of a very small group of people, a country that had a larger war chest or foreign reserve than it did even back in 2014, and a country that saw very little in the way of consequences for its past acts of aggression. The only thing left to see now is if this new wave of sanctions will be enough to finally get them to regret their decisions.